Hi there, my name is Jason Ayers, CEO of the Croft Financial Group and a member of the Investment Review Committee. On behalf of the committee, thank you for taking the time to watch our Portfolio Manager's Brief for December 2019. U.S. and Canadian stocks continue to extend their gains through the month of November and into early December, with consumer and service-based sectors leading the charge. With a favorable labor market, albeit Canada fell short based on recent numbers, and sentiment surveys suggesting that consumers are doing well and remain confident about the future, alongside of low interest rates and continued support of central banks, markets continue to push higher. The US and China continue to muddle along in their trade talks, with Trump now suggesting that there is not likely to be a resolution until closer to the 2020 elections. However, with services rather than manufacturing now by far the dominant part of the U.S. GDP, investors have largely shrugged off the receding prospect of any settlement. Nonetheless, we think investors need to remain cautious ahead of the next phase of tariffs, which are set to take effect December 15th. To date, much of the concern around these tariffs have been centered around the manufacturing sector, which is not considered to be affecting the stock market all that much. However, with Trump's threat to impose additional tariffs on $156 billion worth of Chinese-made consumer goods just ahead of Christmas, these tariffs may very well impact the U.S. consumer and perhaps cool the current stock market rally as we come into the close of the year. Now, despite this near-term risk, optimism is at an all-time high and the stock market is getting expensive as valuations continue to stretch. We think that there is still the potential for modest growth, but any sustainable premium must come from both increased corporate earnings and upward revisions to earnings per share forecasts into early 2020. Now, as we close out 2019, we continue to remain optimistic yet defensive in our portfolio management approach. Many of the risks that continue to underlie what appears to be an unshakable bullish market have yet to be resolved, and several of these continue to weigh heavily on our decisions. The U.S.-China trade deal, Brexit, and the risk of a global recession continue to be a moderate concern. Worthy of mention, once again, is the potential for another round of tariffs hitting the consumer, which could certainly cause some disruption to a stock market already beyond its all-time highs. On the other hand, while investors and traders continue to be headline-driven, from a risk and probability for a negative outcome perspective, we feel the impeachment hearings are likely to have little to no impact on the markets, other than perhaps shaking the support for Trump as he campaigns for another term. Where we do see the potential for significant disruption is around the Democratic leadership race and the push towards the 2020 election. Whether you love Trump or hate him, he is certainly hanging his hat on being the primary influencer for the success of the stock market over the last couple of years. With the fiscal and monetary policies coming out of the Democratic camp being less than supportive to big business, and the potential for a Democratic White House, the stock market will likely remain sensitive to these U.S. political events as they unfold. So, based on our continuing analysis of market risk and opportunity, we are set to remain actively defensive in managing assets through the close of 2019 and into the first quarter of 2020. This approach will include taking profits as company valuations continue to stretch, being selective in which companies we invest in, having more cash on hand to take advantage of pullbacks, and supplementing with tactical option strategies to help enhance returns and reduce overall portfolio volatility. While such caution has its costs, and we have slightly underperformed the major equity indices to date, we feel our defensiveness this year has been warranted given the underlying macro and geopolitical environment and should, in the medium to longer term, result in better overall returns for our clients. And in closing, on behalf of the Croft Financial Group, we'd like to wish you and your family the very best over the holidays and a healthy, happy, and prosperous new year.